Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is May 3rd. Damn, it's May already. Unbelievable.
Wow.
Year is flying by. And have another great panel for you this evening. Take a look at the week ahead, look at the week that just was past. And finally, I think for the first time, maybe in 9 weeks since the war started, we have a gap up open on a Sunday night here, which is certainly a change of character from what we've been seeing over the course of the last 2+ months. S&P's up 20 handles to 72.78 and change. NASDAQ also up 28 basis points to 27.915. The Russell up 44 bips to 28.31. Oil, the loser, down 1.75% to 119 cents. Gold down a scratch to 46.37.
Oh.
The dollar mixed. Bonds a bit stronger. So we have a bit of a risk on flavor over the weekend. It was fairly quiet on the geopolitical front. That's the Sunday scaries or the weekend scaries that we've been having for the last several weeks kind of came and went. Not too much in the way of news, really. There's some back and forth on negotiations may or may not be happening, and who really knows. But it seems like the president has come out in the last couple hours and said we're going to start humanitarian missions to move ships through the Strait of Hormuz, and I guess that's going to happen. So we'll see. We'll see what Iran has to say about that too. Who knows? But again, love to talk to all the traders about various asset classes, get the setups for the week, how they're thinking about things. So if you're new to the channel, please like and subscribe, ask us questions in the chat. So checking in, as always, from Southwest Florida with me is Sara, Pax from Chicago, Pharm from Southwest of the U.S. and Arizona. How is everybody doing on this fine Sunday Open?
Excellent.
Going good.
Excellent.
Nice. It's strange. It's strange to talk. It's strange to see green on the screen. I literally forgot what it's like to see green between 6 and 6:05 p.m. on Sunday night. I think it's been every week for the last 9 or 10, whatever it is, to see us here open. And obviously, we're at all-time highs here for the most part. There's been this V bottom from the March 31st low or March 30th low, kind of ran all through the month of April. We were supposed to be a record pension rebalance for sale at the end of April. Forgot to see where that showed up. And so markets are continuing to move higher, kind of led by tech, led by semis. The AI CapEx story has been strong. Most of the earnings are out of the way for now. We do have NVIDIA in a few weeks, Palantir after the close tomorrow, but really Mag 7 for the most part is done. Big energy is kind of behind us. All the industrials are behind us, and the earnings have come through quite robustly in the first quarter. Really no impact, to say the least, from the geopolitical strife. So markets are here at the highs. We'll talk to everybody about how they're thinking about the setup for the week. So let's kick it over to Sara. Sara, how are we looking for the start to May here?
I'm still just bored with, chopping up here at the all-time highs. Because for stratters, there's just no setups up here. You're just kind of like going into the highs constantly. It feels like forever. So there's been, little intraday pullbacks like on lower time frames. But as far as any real like pullback or corrective activity on the daily, we just haven't really gotten any. A tiny bit on ES this 2 days of red here, and then followed by that day, which was Thursday, which was a good move. But I don't like playing up here. I get bored. So I'm I'll be looking for setups in stocks more than futures for this week, just where there's more opportunity and more ranges to come back through and people to stop out. Because up here at the all-time highs, there's no shorts to play against anymore. Everybody who was short should have been blown out by now since we made new highs on Friday. So you're not really playing against anybody when we're up here. So it's not as fun. And moves don't happen as quickly. So I just don't like it as much.
Anything between those indices? It seems like we're kind of everything's moving unilaterally together, moving together in unison. But are you seeing anything different across the four major ones that you're looking at there?
Not too much other than the Dow is definitely the weakest, hasn't made a new all-time high this whole time yet. That's still up there. So just that would be it. Just Dow is weaker and nobody really cares about it anyway. So, but other than that, no, everything's pretty much, even Steven.
Yeah, I was pointing out last week, or I think it was last week, just the composition of the Dow is really, there's just not that much in the way of the AI story in the Dow. It's heavy on the banks. Goldman's the biggest weight because it's a price weighted index. And so just kind of just some random stuff, but a lot of healthcare in there and, much less in the way of an AI story. And so I think there is a bit of a, there's some information value in the Dow's underperformance there. I think it's kind of suggesting that this rally has been more tech focused. And I think Jim was pointing out last week too, how strong the recovery in NASDAQ has been since the war started. NASDAQ's actually been outperforming since February 28th, right? So when we started the year, we were talking about the rally broadening out and the Russell doing much better. That's flipped a little bit, I think, which I think kind of makes sense. I think we're seeing a little bit more narrowing. We'll focus more in the AI CapEx story as a lot of the uncertainty around the geopolitical remains, supply chain remains strained, low-end consumer clearly in the trouble zone, and so not really seeing as much in the way of a breadth expansion as I think maybe some folks would have thought earlier in the year. With yields kind of closer to the highs, oil still around $100, makes it harder to get that breadth expansion, I think. But Pax, how are you thinking about the setup here for May at all-time highs? We were talking a little bit before the show about potential of a good high maybe made on Friday. We'll see. But how are you thinking about the setup here?
I think that we either break from here or we consolidate here. I don't think we, I don't know those, but that's my opinion, and I don't trade my opinion. I think that we consolidate. I think that we find a range and we kind of sit in it and churn it, and maybe take it out a little bit and get back in it. Take it out a little bit, get back in it. Or we people start getting. Last week I can't stress the importance of listening to that incredibly interesting conversation with oh my goodness, I can't think of his first name. Wong.
Paul.
No, not Paul. No, not Paul Tudor Jones. That one was good. Come on, what's his name? The former Fed man, the former Fed guy. Joseph Wang. Oh my goodness, I'm so sorry, Joseph. And I listen to everything he says. It's just I'm getting older. See. Anyway, listen to that to that interview or the conversation with Anthony and with Tracy, that Shy Girl. That was a great conversation, and and in it, whether his perspective is right or wrong, he's got Joseph's got both. I know Boomer. Both, I see you, Anthony. Joseph's got the right outlook on things, because he can go either way. Either there's going to be peace made and crude is going to come down and the price of energy is going to come back, and the inflation that's going to hit this, isn't going to be so severe, and it's going to, or this is going to sit here and crude is going to hover around $100 and continue to rally, which it looks like it, will do, and we're going to start feeling the effects of inflation. So instead of having an accommodative Fed, maybe the market is going to start to show us that they're going to have to raise rates to combat inflation. I don't know. It's interesting. And I can sit and listen to much smarter but much better educated people on it than I. But that's not what I do. I'm a trader, and I'm going to look for opportunities to trade and make money. I like reading that stuff. I like listening to it. Especially when it lines up with my view of things. But as I tried to point out, I think last week, certainly point out many times, that when you find a nice trade, whether it's to the long side or a short side, that fits your process. And, Sara was saying too, that, sitting on the sidelines, is a super important position. Flat is a very important position. But when you find something either long or short, and the technicals start matching up, that Pharm is going to so eloquently talk about in a second, And the macro story lines up that those are trades that are going to make your year, your life in some cases. That'll make your career. And so we have to start with the myopic view of the market. I like 73 even as a high. However, if we take 73 even out, as I said last Sunday, I like 7,200 as a high. However, if we take it out, we will trade up to 73 quickly. We did that in a day. If we take out 73 even on the upside, we will trade 7,400. I showed you guys the math on Twitter. You can go back and look at the math. Why it's 202-point swings with 101-point ladder rungs. So I don't care about big round numbers. I never do. Just so happens that the levels are matching up with big round numbers. So if we get above 7,300, the S&P will trade 7,400, and it will do so pretty quickly. But if 7,300 holds, it's back to 72, back to 71, back to 69.98, and all the way down back to till we see the quarterly pivot. So, just look for those little myopic entry points, myopic meaning, narrowly focused, that sometimes turn into, and this Pharm, this goes to what we were talking about with Tudor Jones, that sometimes turn into bigger swings that oftentimes, or not often, but sometimes turn into trend trades. And then you ride that trend until the trend doesn't ride anymore. And a lot of people did that to the upside, from the lows of I don't remember what the date was, but 63.53 in the spoos all the way up here. So who knows? This is a great trading environment. Keep your head on a swivel. Be prepared for either side of the market is the point of all of this. I've got my opinions, but I'm prepared to trade the upside as I did last week. I did it very well, and I'm prepared to trade the downside. And if the market does start to cooperate to the lower to the lower end, I'll be looking to add, and I'll take more out of the market. You know what I mean? So be prepared for either side. Don't make calls. Don't trade you can make calls, but don't trade your calls. Don't trade your opinion. Trade the market as it is. It's a very, very tradable environment. So keep your head on a swivel, manage your risk, my brothers and sisters, and learn how to effectively manage your profit. And you will be here for a very long time.
Yeah, that makes sense.
And dollars, many dollars.
Yeah. Shifting over to Pharm. What's the setup here for you? Obviously, we've been talking kind of before the show about the strength in the tape here, and not wanting to call a top. I've been wanting to call a top for quite some time, obviously, but wanting to call, but until we see the evidence, there's no reason to do it, right? And so, how are you thinking about the setup here as we kick off May?
Yeah, calling tops and calling bottoms is very sexy, but I'd say many times I'm way too old and fat to be sexy. So it's just not necessary. I posted that video on X like a couple of weeks ago. Like, first of all, here's the risk in trying to fade a multi-month upside breakout like this. And here we are, a couple 100 points higher, 300 points higher, more. But here's what a top would look like, right? And we haven't had anything approaching that. So, go ahead and keep calling your tops, and I'll just kind of day trade, right? And just mind my own business. If you don't like the lack of volatility that we have, like Sarah's talking about, like, it's not really that interesting up here. It's just we go higher, right? But if you don't like the lack of volatility, and you're a bull, it's 100% your fault. You should possibly go to jail. I'm not kidding. But I'm kidding, but I'm not. It does get pretty boring, right, with these tightened ranges. So the first thing we talked about with like what could a potential top look like would be like, hey, let's see some kind of a cash hours excess high. We got that on ES on Friday. NQ was dog shit, not even close. And it's already taken that high out, which makes perfect sense to me because it looked like it was not directionally finished. But ES did. Okay, so that's one thing, right? But we've talked about this before, like you can still go higher just because you have an excess high. AMD put in an amazing excess high like $100 ago. But all it did is come down to the bottom of like a 3-day range, and then it broke that range to the upside. So until or unless you're creating some kind of a range, breaking that range to the downside, there is no top. There is no trend change. And even then, we're still just talking about like a daily high or low, right? Like heaven forbid, we haven't had one yet. All we've had is these consolidation ranges. If you look left on my chart, not last week, but the week before, it's just box consolidation. That's all this was. This wasn't a downtrend on a 30-minute chart. Even last week, I mean, some of this was ETH. You could like try to make an argument. It'd be a trash argument that this was like some kind of short time frame downtrend. It wasn't. I mean, at best, this is a soft high or low on a daily basis. It was a consolidation range. It broke to the upside. As long as we continue to do that, we simply go higher, and that's all there is to it. Once that changes, it'll be readily apparent. Give back at least a multi-day range, give back some kind of a key high time frame, low volume node. Then we can start talking about, where is this daily high or low going to come and take place. And we've also said this before, like, I mean, if you look at it from the low all the way up to now, I mean, we could pull back, 50% of that, and that wouldn't be wildly unhealthy. But like, there's a lot of body bags that would be out there if we actually pulled back, 500 handles from here. But into like the nitty gritty for this week, I mean, to me, with this high in place, I try not to have too much hopium for anything to come off of that. But it's something that we need to be aware of. If we do see weakness, we have to look back at that and say, well, okay, maybe that explains some of this. Last week, we did the situation where we had a range. The prior Friday had come out and broken that range, and then the question was, is that break going to sustain, or is it going to fail? A failed upside break is very, very different from an actual downside break, and that's what bears got to find out last week, right? It ended up doing what I like to half-jokingly call a false failed breakout, right? Like the breakout failed, and then they were like, haha, just kidding, and shoved it right up at you. So the fact that sellers couldn't even get down, like not even to the prior week low, but like not even to the prior week value area low was rather pathetic. They got what they deserved on Thursday. So that Thursday structure is going to be key. I believe if we broadly consolidate above this 72.32 to 72.36, that's reasonably constructive. It would mean we have taken out Friday's low. Friday closed on a spike down, which usually, and if you're spiking this thing down in an uptrend, you're going to get this, right? Like you're just going to get punished. So sellers got punished, the late sellers, okay, fine. But I still think even though taking out Friday's low would look, a little bit weakish, whatever, if we're consolidating above this 72.32, 72.36, I think that's broadly going to be reasonably constructive. We can just fill out volume, right? You can see there's just not a whole lot here relative to last week down in the basement. And in the prior week, you got to build volume somewhere, right? So why not above 32 to 36? That's fine. What sits below there is 1, 2, 3 4 consecutive sets of single. That was after no, that was during like multiple sets of single prints, right? Just ripped out of there from this breakout area 72.06 to 72.11. So if we get a quick dip into those single prints below 32 to 36 and then just rip out of there, then that's your long setup. If we actually do see some persistent weakness below 32 to 36, then we can come and backfill that structure, which is very thin. You can see on the volume profile, there's not a whole lot there left behind from those single prints ripping through there. And I would say this 72.06 to 72.11 is going to be an incredibly important back test. It could be very strong. We saw similar last week, right? When you come back down through a range after a potential breakout, there's potential for a lot of trapped sellers to be left behind. That could be buyers, right? Now, opportunistic buyers to finally cover their asses and get out of things. And then you're also going to see initiative buyers stepping in and saying, okay, well, there's last week's value or high. That seems like a good place if we're going to the moon to get long. So I would say if this back test holds or even a quick peak below there, that would be reasonably constructive as well. I think if that's lost, you have to start saying, okay, well, wait a minute. I've got an excess high in place. I'm coming back into the prior week's value. Like, all right, I need to be a little bit more cautious here on the long side. But the same side, flip side of that is that 77 to 82 can still hold. That's basically what defined range high the trailing week. So we're going to need to get back through there, cross this all the way back down to last week's value area low, and still make it to the trailing week's value area low, and then the trailing week's low. And if we even did that, okay, if sellers accomplished all of that, that would then just form a 3-week balance above the prior all-time high. So like not really all that bearish, right? A multi-week consolidation above prior week prior all-time high is assumed to be constructive to me until proven otherwise. You can enjoy the downtrend on the way. That would give us the opportunity to actually finally have a daily higher low. That would be fine. We start talking about more significantly bearish things, in my opinion, once we're back below, 70.43, the prior ETH all-time high, 70.31, the prior RTH all-time high, back below 7,000. Now people are starting to soil their pants a little bit. I think, at least on the long side. So that to me is ES. It's not going to be as simple as holding above 32 to 36 all week because that's too easy. So they're probably going to do some kind of trappy action here, I would say, off last week's Mayne volume, whether that's 72.06 to 11, or maybe we even come back down to 77 to 82. As long as it reclaims 32 to 36, it's probably going to be go time and negate any weakness that we have in play. If this is an excess high, then I believe we will see, let's just call it last week's volume point of control, which happens to be at 71.69, a very #nice target. To me, if this is a proper end to this upward directional move, and this is an excess high, then we're here by tomorrow. Tuesday. It's Sunday night still. We're here by like Monday or Tuesday, like real fast. Otherwise, if it's just kind of like messing around in here, then I'm, not very impressed. And I'll still be looking to mostly trade the long side, but two-way trading is fine if you're in some kind of a short time frame downtrend. So that's ES. NQ, as mentioned, this high wasn't really that great. Spent kind of a lot of time up here.
That was gross Friday.
Yeah, didn't have any kind of like fantastic excess or anything like that. And sure enough, here we are taking it out. That's no surprise. So it has been stronger. Craig asked about like relative strength. It seemed like to begin the week last week, like YM, RTY were just absolute dogs, as NQ just ripped to the moon. And then we had some good news on the one AI name in the Dow. I can't believe that Craig forgot this. The great bastion of AI that is Caterpillar. Like, what do you mean there's no AI?
That is the AI story.
So AI bulldozers and shit. Come on. They're building for all of it, right? So that is where AI and the Dow comes from. But yeah, so once the Dow really played catch up off some of those really nice earnings, that's when ES finally took off and joined in the party a little bit. So now this high has been cleaned up. Let's be very, very clear. This is not an RTH high. So even if this leaves, some kind of nice session excess and dumps back through here, it's not going to be spectacular or anything to write home about. Not to say the market can't pull back off of an ETH high. We've done that literally every single time for like the last 3 years. Like every major pullback of more than 2%, 3% has been off some trash ETH high. So it's been much to the frustration of many market profile traders and purists. But for NQ, again, like the safest and cleanest consolidation is above this 724 to 751. That's reasonably constructive. We kind of already did the move, right? Like for me, if we pull back to here, we were likely to retest Friday's high. Like we already did that between the after hours move on Friday, which is kind of silly, and then now. So that doesn't really leave a whole lot of actionable information. But you can see, if you just look at Fridays, just look at the candles, right? Forget profiles. You don't need a profile. Look at the candles. You got a big opening drive in the first 30 minutes, leaving single prints in that first period. And then you've got a consolidation range. So you have a bit of a P here, right? See that P? We all know the risks in P-shaped profiles, right? So if there is persistent weakness below 724 to 751, this is like a trade for like tomorrow, not so much necessarily on the week. It could happen, play out Tuesday or something like that as well. There is risk of coming back down to Friday's low. I've got a couple of spots in between there. One thing I want to call out, since it's not on my chart, and I know a lot of people take screenshots of the levels, this between 440 and 469 and 569 to 585, there is just a lot that could be reactive that I'm going to be using daily levels for. Again, single prints from Thursday, from that big breakout day, basically running from this 440 to 469 up into about 542. We dipped into those on, was it Friday pre-market? Yeah, Friday pre-market. That was a long rip and go. So anything in here could be reactive. NQ's got a long way to go before it's in any kind of a trouble. If we do put in some kind of a cash hours high, I think that would be a start. But if we do start cracking back below 440, persistent weakness below 440 to 469, it's sort of like your first caution that, okay, like maybe things aren't going well. But if you just drop a a fib on last week's low to last week's high, you're going to get like your 50 to 60, 61 point. It's going to be right in this range here, right? So until or unless we're taking out a prior week's low, we're overlapping at least value lower on a weekly basis. And until that happens, bulls remain in control. Look what happened, the opposite of that, last week. You can see that the trailing week's value area high is sitting right here in this 27,040 to 27,069. Congratulations, seller. Congratulations. You got a couple of wicks below there, right? So, you know what I mean? It's the same type of deal. We just come down to last week's value high sitting here in the middle. Maybe it's 440, 469. And that's all the lower they can get. Then sorry, we're going higher. So there's just patience, I think, on the short side. You don't have to be first in. It's okay to let sellers show themselves first. They have not. Every single bearish setup has not seen bearish follow through. And every single bullish setup pretty much has, right? So until you start seeing that flip, we're in a regime of buy the dip. It's going to be it's going to be very obvious when we have flipped to a sell the rip market. The news bombs, the buy side tape bombs are going to get brick wall. We go lower. We're going to start to see that. We're going to start to see like actual lower highs, lower lows. You're going to start to see your classic bullish setups that you love to take. You're going to get bagged on those. You're going to say, hey, what's happening? That's your change. It becomes very, very obvious. That has not happened yet. So for me, my eyes are open this week, because of a potentially decent high at a pretty important extension. PAX has an extension up here. I've got an extension up here. So we'll be mindful of that. But it's very much on sellers to prove themselves and find a way to do some kind of damage, like outside of some stupid ass news bomb that trades lower for a few minutes, right? For the most part, they've been brick walled. Buyers have stepped in and bought that. So patience on the short side. Careful chasing rips. Look for those constructive pullbacks, and I gave you a few areas to do so for this week.
Right. Pharm, a lot of discussion in the chat. Very important. I think people really want to know, what is the name of the new puppy that you got?
Yeah, it's Brutus.
Disclosed. Okay.
It's Brutus. Yeah, which, it was actually the name of my childhood dogs. I had no interest in ever doing that again. There's like no way any dog could ever compete with this guy. He was a purebred, supposedly a purebred yellow lab. I was 142 pounds, but like the chillest dog ever. Never needed to be on a leash or like anything. But at the same time, like he'd rip your throat out if you were messing with one of the kids, So I was never going to do that again. But like we met this dog and he was just like, just the chillest puppy after seeing a couple other puppies that were like stupid ankle biters. And this one was just like, oh no, I'll just come and lay on your lap and be cool. This sounds good. So I decided to go with it. Now the kids can enjoy a Brutus as well.
Very nice. Very cool.
That's nice.
Well, we're a half hour into the Sunday Open. Kind of quiet. Still gap up though, but a little bit off the highs. S&P's up 8 handles, 72.65. The Russell up 26 basis points. The Nasdaq kind of getting almost back to flat. Still up 13 handles to 27,849. Crude is rallied back a touch, back over 101 to 101.19 last. Gold down 27 bips. Dollar mixed. Bonds kind of quiet. Last week was kind of catalyst heavy. We had the Fed meeting on Wednesday. We had Mag 7 earnings after the close Wednesday. We had month end on Thursday, ISM on Friday, kind of catalyst heavy there. Obviously the Fed meeting kind of went, I think, as most people would have thought, obviously no cut. There was some hawkish dissent, 3 hawkish dissents, kind of the biggest amount of hawkish dissents we've seen in quite some time. And then Myron had a dovish dissent. So 4 dissents overall for Powell's last meeting. Turns out he is going to be staying on at the Fed until it seems like his DOJ stuff gets cleaned up. I can't say I blame him, but we'll see. So he will be a governor on the Fed until he deems it to be safe for him to leave. Otherwise, he can run his position through January of 28. But we are, with the 3 dissents, makes it harder for incoming Chair Warsh, assuming he gets confirmed, which he should by the next meeting. It's going to be harder for him to push a narrative of cutting, particularly after the type of ISM number that we got on Friday, which was another strong expansionary print, but prices paid up above 80 to really, almost nearly 5-year highs here. So we are in the employment component of the ISM down in the mid 40s. So you really have a kind of stagflationary environment there. with inflation and prices running well above normal, certainly well above 2%, and the employment component showing some signs of sluggishness. This week is the kind of big employment data week. We get the JOLTS numbers on Tuesday that'll be for the month of March, and then we get ADP for April on Wednesday, claims on Thursday, and then the non-farm payroll on Friday. So all eyes will be on the labor momentum this week. We had been getting the weekly ADP numbers over the course of the last 4 weeks, and they've been very robust. So really not too much in the way of evidence that the labor market is rapidly rolling over yet, but we'll keep an eye out for that. Also keep an eye out for the services ISM number on Tuesday. That would be a good read on how the U.S. services economy has been impacted by the war or not. Clearly, we've been seeing, more sluggish kind of overall consumer activity. Airlines, TSA checkpoints have started to move negative year over year. Obviously, we got the Spirit news on Friday about them going bankrupt. Just kind of anecdotally, hearing more of a struggle in the airline industry, kind of dealing with the high prices and the high fuel costs and them having to raise prices. So keep an eye on that services and ISM number on Tuesday. But just taking a look here at the sectors. I don't know if you have me up here, but I wanted to just look at the year-to-date sector stuff. Sarah talked about kind of a quiet indices, but under the hood with the sectors and the individual stocks is kind of where a lot of the action is. You can really see it here. The year-to-date semis up 42%. XOP is EMP stocks up 40%. XLE and a big energy up 31%. And then on the flip side here on the short side, software is still the dog, down 18% year to date. Healthcare down 6%. Banks, big banks down 5%. And then a lot of stuff kind of tucked in the middle there. So despite the fact that you have the Qs here up 10, I think IWM's up 12. I can go back here to, and the ES is up. But under the hood is really where we've been seeing a lot of this dispersion. And so as we kind of push into this week, we're in positive gamma. The window of potential weakness is largely closing. Means it'll be challenging for us to kind of really see a sell-off materialize unless we get some left tail stuff on the Iran stuff until expiry next Friday. Share buybacks resume. We had the pension rebalance. I guess that was probably part of the reason we were so weak into the close on Friday was probably some pension rebalance flows to the negative side there. But broadly speaking, we're in a supportive flows environment for the next couple of weeks here. So maybe harder to see the indices really crack unless we get some more evidence that the economy is slowing and that the labor market is rolling over. So let's shift over, Sarah, to crude. Crude's just kind of been sticky, strong, well above where we were in the end of February. The back end of crude is much stronger as well. So the inflationary dynamics from energy are going to be with us for a while. Straight's not really moved. Trade of Hormuz is not really moving materially yet. But what's your thought here on crude?
So last week, I'm going to start there. We had that inside week setup that we talked about in the bottom of the broadening formation that we were talking about, and coming back up and through it and kind of taking out, levels from the left side of the chart, of course. So we said that if we were above 98.39, we wanted to be long, and we were targeting this high. What is this high? 105.63, and then this high at 109.19. And we hit that on Thursday, and then they started taking a little profit. Still, this looks nice and healthy for continuation up. So they did gap it down as far as the open today, but gap down, they're buying, so it's a gap down buy. So they're trying to go outside day, meaning take out Friday's high at 106.65. And then still, working their way up through this bigger broadening formation that you can see that I've got drawn here. So still trying to come up to these highs at like 117, 119. And I still think we see all-time highs for oil. For now, it's still looking that way. We do have a new month, don't we? Yeah, and let's get rid of this box. So what I want to point out here is oil closed, what was last month? April as an inside month. So if we can break out of last month's highs, I think that we should see new all-time highs this month. But that would mean obviously we need to get back up to the top of that broadening formation and above last month's highs to go inside month and up and hit this target up here. So I don't know what that means economically for the world and oil. All you guys know, I just read charts. You're the what do you even call it? What's your title again, Craig?
Macro something.
Macro
tard.
Macro tard, right? Exactly. Somebody that nobody listens to.
Yeah,
No.
you're the macro genius. I just know charts. Economist, I think they call you.
Macro strategist. Yes.
Chief macro strategist.
Chief. So sorry. I've just probably fucked that up real bad for you.
That's right.
But yeah, so things are still looking pretty healthy for oil. This looks like just like a normal pullback for a continuation up to take out, like I said, 117, 119, and then if we can stay above last month's highs this month, and then all-time highs.
Yeah. I mean, the resiliency of equities and indices broadly with, this elevated crude environment has been, pretty unbelievable. And really shows you the relative strength of the U.S. stock market versus the rest of the world. But Pax, how are you seeing the oil market here?
The key word in what you just said is unbelievable. Yeah, it is unbelievable. Yesterday, I picked up a suit that I had made, and my wife and I were walking in, and there were a couple of young guys talking about crude. So I asked, "Are you guys traders?" Yes, they're quant traders from DRW. Yeah, and you know what? I should have taken a picture with them because you would not. It couldn't have been any more stereotypical. But they were just so smart, and we had a great conversation. They have crude going to like 140, and if not higher, if not much higher. It was a super interesting conversation. So from a trading standpoint, 103.56.58 has become very, very pivotal. So above 103.58, we're going to trade back up to 110 and then up to the high, 119, whatever that is, 118, 119. Below, hold on. Sorry. But my phone kind of went off. And then underneath 103.56-ish, we'll trade back down to Friday's low, 99. Well, we did that. We opened there at 99.11, 99.30. And then underneath there, we can head back down to the previous week's low of $94. And then we'll see where we're going from there. So, it's, again, crude has been an incredibly good opening range trade. It trades in 60 handle ladder rungs from the opening range. And it gives you, the ATR is just huge, So I think that from a trading standpoint, crude is a great trade right now. Actually, the ATR is shrinking a little bit. It's $6.13 during the day. So, but that's still great. $6, I'll take that. That makes your risk worth certainly the reward. So I don't know. It's just a really simple outlook on it. I made some decent money trading it. Last week. So I'll look to trade the opening ranges, and if we get above 103.58, then I think this is going to be a good. Well, it is a good trade. I think above 103.58, then we can have some continuation.
Yeah. Pharm, any big picture thoughts on crude here?
Yep, definitely been keeping up on the crude levels and even punched it into the old indicator script for this week for the room because it has been a very good trade and the levels have been really, really clean. I mean, it really has been behaving where it should and reacting where it should. I mean,
Right.
More so than ES for sure because participation is relatively high and I like that. So I might trade crude a bit more as long as that remains the case. I like to trade high participation markets. So yeah, last week we talked about, like Sara mentioned, we were looking to be, long basically above the prior week's high. For me, it was 97.69 to 98.20, and you got the boom time, right? I mean, it just ripped. I also agree that this is a reasonably constructive pullback here. I mean, again, this didn't even quite make it to last week's value area low on an all-hours basis. Just swept out Friday's low, and it's a gap down buy. For me, these should trade pretty clean. These levels here, if you want to screenshot them, but broadly above this 97.69, 98.20, I'm still constructive on crude, at least back up for this 102.11 to 102.69. Pax mentioned 103.58. I think he misspoke and he mispronounced 103.69. Clearly very important and nice level. I mean, you can see this as a support and resistance, but this goes way back. Many weeks was a key extension for me in a big spot. So this 103.69 would be kind of like right in here would be like your trap range for a failed reclaim of 102.11 to 102.69 that you'd have to watch out for. But I do think firm base above 102.69 outside of, again, an initial reaction around that 103.69. I do think we're going back up to 106.02 to 106.69. And I think that's roughly where Sara mentioned, and I think it was last month, clearly not last month's high, right? Clearly not. But above there, I think she mentioned maybe we're going to new highs, and that makes sense to me. Last week's value area high, if we're building time and volume above there, we're certainly taking out last week's high, and then you're just looking left, and you're looking at a whole bunch of wicks on high time frames to go through. So I would tend to agree with that. You're going to want to see Scotty B step in. He's going to need to stuff this below 91.69 to 93.19. If you just look a little bit left, you're seeing all these profiles peeking out the bottom of the screen. Well, what's that mean? A lot of sellers trapped, not buyers, right? So there's a lot of volume down here that just got carted out, and you can see what happens when that happens, right? So big move, and now healthy consolidation until you're seeing some longs really meaningfully trapped off sides. It's more likely that we're going to go higher. Right now, we're in that opposite situation or similar situation with equities, right? There are no longs trapped in equities. So that must change. And for now, it does look to me like the balance is more shifted in favor of buyers for crude. And, Scotty B's been struggling to control this thing. He comes in, late at night when nobody's around, maybe Asia session. We've gone to bed late at night, and he steps on it a little bit, but he hasn't really gotten anywhere yet. So, hopefully he's leveraged like our future Social Security and Medicare, to cover margin on these shorts, and he doesn't get blown out. That'd be fantastic. But that's where we're at right now, and I'm constructive on crude. And again, like we haven't seen, and it was well before the low in equities. It was well before the low that equities kind of shook off that correlation. So until or unless that correlation really shifts in direct correlation, of course, to where you're seeing it on like the 5 minute with VIX responding, whatever, just trade crude on its own. Like, don't try to use crude for some kind of read into what equities are doing. We're not there right now. That's not the regime. I wouldn't worry about that. But it has been a great trading vehicle. So definitely be watching crude this week.
Yeah.
Good point.
Yeah. No, I mean, looking at the cross asset correlation, I had been talking about that and focused on that for quite some time. But Pharm, you're right. I mean, things started to break a few weeks ago on that relationship, and we'll have to keep an eye on it. But one of the relationships I want to just get Pax's view on the bonds, because in an environment where kind of I think the three of you are a little bit more biased that crude has upside. Pax, do you think that the bonds have downside?
Yes,
because that's something that we've been seeing a lot of, right?
Yeah, a great deal of downside. Yes, I don't know about a great deal of downside, but you mentioned earlier about the Fed meeting, the three hawkish dissents. When was the last time that's happened?
It's been quite some time.
Right. And then you've got Powell staying on, and that's interesting. I know that he said that he's staying on until the end of the investigation and things, but Joseph Wang had a very good. I'm so glad I got his name right. He had such a very good point about that in before the announcement was made about why he's staying on, to kind of keep the Fed in check. So while we're seeing, and we all know why President Trump had put the pressure on him and to skedaddle, and why he chose Warsh and all that, and to him have an accommodative or dovish Fed. But this the markets are kind of starting to show us something different, and the three hawkish descents I think is super interesting. So that right there would indicate that the bond vigilantes are going to have that the bond market is going to show us something different. So what ultimately is going to who's telling the truth? Is it crude and the bonds starting to show? Or is it going to be, or is it the equities? Is this rally going to push down the price of? Well, the rally won't, but is the rally signifying peace and prosperity in indices, or is gold and the bonds starting to show a little bit of cracks in the inflation picture? In which case, it's anybody's guess what happens. But yeah, the 30-year bond has some more downside. We are right now trading at the quarterly pivot at 113.10. I want to be long above that and short below it, but we are stuck in a range. When bonds start to move and they come out of the range, they do. They move and they move quickly, and they're a great trade. And it's not that difficult to get. It's more efficient. I shouldn't say difficult or easy. It's more efficient to get the. You can get the edge more efficiently in the bonds than you can in the S&P or NASDAQ. The edge is always been in my life has been, you buy the bid and sell the offer. So it's easier to buy the bid because you can scratch the trade than to sell the offer, and still catch something for a good point and a half, 2 points on the upside. What is Craig? Do you know what the 5% price is in 30-year? In the 30-year, would that be down like a down here?
We closed at four. Yeah, we closed 496 on 30s on last. So it's just probably I don't know if that's like how many ticks that is. I'm not 100% sure.
All right, me either. So, but it's got to be down near last week's low at 112.23-ish, right?
I think so.
Or even a little bit lower at 112.11. So if that's only a point away. So if we take out 112.11, that seems to be the big round percentage number. That seems to be the number that everybody seems to be thinking is going to be the important piece in this. So again, keep your head on the swivel. Be ready to trade either side of the market. And to Tudor Jones's point, this is not a time to. I don't think we're breaking tomorrow or next week. I think we consolidate, but this is not a time to be heavily invested in the stock market up here. Not with all these other things, staring us in the face. Trade, sure. I think Pharm said that beautifully, and so did Sara. You're looking for spots to get long, to get short. You're gonna find some nice tradable areas, whether you're talking about the S&P, NASDAQ, or you're talking about gold or bonds. Crude or bonds. And those markets are very tradable. Gold, I don't want anything to do with right now yet either. 45.92 is the monthly pivot. But, these are good trades. Pay attention to it. Manage your risk and take some money out of the market.
Yeah.
It's going to be interesting to see who's telling the truth.
Yeah, we'll get a read of that soon enough. But there is some more bond news out this week. No auctions, but we do get the Treasury quarterly refunding announcement information. So 3:00 on Monday, we'll get the total amount of issuance to be released in the next quarter. No real expectations are there of neither here nor there, given this is the tax collection quarter. But Wednesday morning at 8:30, we get the composition of the issuance, and there's been talk forever that eventually Treasury is going to have to start increasing the amount of coupons. So we'll have to, it's unlikely to happen at this release. But we could get some language in the announcement that suggests that they may be thinking about issuing more coupons later. And if they do, that would put some more pressure on the long end. That would see yields breaking out further, probably push us through the 5% level. So keep an eye on that as another potential catalyst for the week at 8:30 on Wednesday morning. So 10 more minutes left of the Sunday Open here for us. Again, quiet. S&P's up 10, 72.68, and NASDAQ up 25 to 27.862. Crude down 1%. Gold, we'll get to that one next. Kind of getting almost back to flat here, 46.38. Silver a touch stronger. Platinum and palladium also a touch stronger as well. The dollar is more on the mixed side here. Just to your point, Pax, if the Fed is not going to be looking to raise rates, yet these dissents are moving us in one direction. But given the Trump, strong hand, it's going to be difficult, I think, for Warsh to push any tightening agenda. But that doesn't mean that Europe isn't going to tighten, and it looks like they are.
Yes.
Because they didn't hike at this last meeting, but all indications are that they are going to be looking to hike at the next meeting. So think about an environment where the ECB is likely to be raising rates, the UK may be raising rates, and the euro rallying against the dollar, the pound rallying. So, some of that dollar weakness may continue to show up here in an environment where the Fed is late to hike. Other central banks are beginning to hike. But if the dollar's weak, that's likely going to be supportive for gold. Gold's kind of been in the, neither here nor there camp for quite some time. Gold volatility has fallen a lot since it was much higher earlier in the year when we had that blow off. But Sara, are you looking at all or much at gold and or silver? What are you thinking here for the precious metals?
So for all of April, we were talking about how we were in a consolidation, and that still is true. So we closed the month of April. These are monthly candles on the chart. We closed the month of April as an inside month. Same with silver. Silver closed as an inside month for April. So what really is of interest is which way they break the equilibrium. If they break above April's highs, we would want to be long. If we break below April's lows, we would want to be short. So we're still kind of just waiting to see what happens. Let me see. I do like the setup heading into this week for, let's see, silver for sure, oil or gold possibly. So the setup for this week, I'm going to pretend that's not there. So the setup for this week for silver would be long above last week's highs to trigger us out of that consolidation. So basically using the weekly time frame to trigger the monthly time frame, and then maybe hopefully come back up through here. So like gun to my head, I prefer it long. And like I said, this is a nice setup for next week. If we can stay above last week's highs, we'd look to go to last month's highs and then keep going up, climbing up the chart to the left. So those would be your levels. In gold, basically it's the same setup. It just didn't close, or it's not green currently. This week is not currently green, but that doesn't mean we can't flip green. So same setup though. So you're going to want to pay attention to the orange line. So above last week's highs at 47.45, and then you're going to see if we can trigger those monthly participants to buy it. And again, I prefer the long side because we've already taken out, anybody who was long from back here. So anybody who was holding long since December of 2025 probably got taken out this week when we went, below that low there. So I like it for back to the upside. But, first things first, we have to get and stay above last week's highs. And then we have to get and stay above last month's highs, and then we can continue up.
Pharm, any gold action in your future here? Any thoughts here on precious metals?
I mean, every time I look or I'm forced to look at one of these charts, I start vomiting uncontrollably. So no, not too much interest just now. I do like longs preferred. It was an okay low this last week that we traded. But to Sara's point, we're going to have to get some key reclaims. She mentioned last week's high up here. These are not updated levels, by the way, so maybe don't screenshot them or anything. I tried, and I was just like, I can't do it. This looks gross. Like on all time frames. So I need to see something really compelling. I was interested though down at this low. And so I think if we can at least reclaim 4680s, 4690, sort of get into this upper range up here from last week, it gives us a shot at taking out last week's high. If we just kind of remain capped below, this is a decent level anyway, still 4672. then we can just build up volume in this range. So it could actually make for some really good day trades, I will say, now that this move has taken place. So maybe I can find some interest, but generally have not been looking for any kind of major swings on gold just yet. It just doesn't appeal to me. I don't see anything to work with, on a big trade basis. That's usually the only time I'll dip into gold is if I see something really big and juicy setting up for myself. But for now, it wasn't good enough for me to update my levels, so I'm not super interested.
Yeah. I think part of the gold story last week, some of the strength had to do with the BOJ, MOF, Japan, yen intervention dynamics that were going on, which Blake so eloquently pointed out right as we were talking on about 2:15 on Wednesday afternoon during the Fed meeting about keep an eye out for yen intervention. And it happened in a big way on Thursday, whereas the dollar yen moved from kind of the highs of near 161 down to sub 156 pretty quickly. And it was the MOF in there, selling dollars in order to help stabilize the yen. And so that dollar weakness, I think, helped catch get the gold market re-engaged again too. So we'll see if that continues this week. Japan's back from holiday as we push through the week. But Pax, any big key levels for gold that you're watching?
Yeah, gold. So gold is look at this. The monthly pivot is going to be 45.91 and a half. So the upside target in that is going to be 46.41 and a quarter. And then the flattened zone or the swing completes at 46.91. So 45.91 it's 50 handle increments. Okay. So you're going to take profit at 46.41 and add above that and take the money at 45.91. Gold needs to get above 48.60 for it to really turn up with any huge swing trading or, trend continuation. 48.60 is just simply the halfway point of this entire move between 56.26 and 4100. So I'd like to be long during RTH. I'm not going to look to do it overnight. I would like to be long at 45.91. If we get below 45.91, then again, it's $50 swings. With the next swing being completed at 44.92, and then underneath that we can head down to 43 quarter, 41.40, and then 4100.
Yeah.
But nothing now. I want to see what we do during the week. I want to see what we do when I think the story I think the most compelling part of this story for me is going to be crude and the bonds, and then the indices and gold and silver will kind of follow suit from there.
Yeah. Last look at the tape before we transition over to the crypto closeout with Trader Mayne and Ponzi Trader. We'll get a deeper dive into crypto and Bitcoin and all things in between.
Let me say real quick about that show. I can't wait to listen to those guys. I listened to the majority of the show last week. I bought a bunch of Bitcoin above 74,000. And I'm looking for Bitcoin to fill the gap at 81,210, and then above that to continue up to 94 and above. So I'm going to really be listening to those guys with attentive ears.
Yeah, I was going to point out, I think Bitcoin's at the highest levels that it's traded at now since these guys launched the show. So we'll see kind of what they have to say about that. But I just wanted to point out, this is to me, again, just kind of to the earlier conversation, there's definitely a character change. Today is the first time in months that we've been talking about a gap up open, and green on the screen here for indices and red for oil in quite some time. I don't know if that means what that exactly means. It's different. So whatever trading environment, maybe we were in during the war where we saw those Sunday gap downs kind of get bought and then get sold at the end of the week or not. It's just, notable that as we start this new week here, first full week of May, that we're starting out with a little bit different of a character change here with the markets kind of opening green. But last word here, Sarah. Any thoughts on Bitcoin before we transition over to the crypto closeout?
It's just still kind of like chugging its way up. We've had consistent, let's see, 1, 2, 3, 3 weeks straight up consistently, and you're about to get a new weekly candle here, and we're going to close as an inside week this week, and they're going to continue probably to the upside, so it still is just moving up. I just I don't love it where it is. It's kind of in the middle of this giant wall. It's literally in the middle of it. So, I mean, that's kind of the range that we're in. If it's going to keep going, it would likely try and take last quarter's highs. That would be a level to, pay attention to. See if we can get up there. So if you're long, that would be good for you. But right now, I know I've been saying I like the downside, and I do, but there's no downside signal on this chart anywhere. So even though I like it, you can't be short right now till you get at least a weekly reversal, meaning you take out a previous week's low. And that has just not happened in the last, like I said, 4 weeks. So it's just climbing up slowly.
Yeah. All right. Well, we're here at the top of the hour. Another great show, everyone. Really appreciate you joining us. Enjoy the week. And now we're getting ready to transition over to the crypto closeout with Trader Mayne and Ponzi Trader. Let's get cracking.
What's up?
Hello. How are we
Dude, once
doing?
again, I almost matched you again. I was like, I have the hat sitting on that chair, and I'm so grateful that I took it off. You need to buy a different wardrobe.
I know, or not, or we just keep doing it. I'm just gonna keep trying to guess what you're gonna wear, and see if I eventually can get it right.
I got the NJT swag.
How do you
Thank
have
guys.
the NT live merch and I don't? Is this because I missed the event?
No, I had it shipped to my house. Now they have
Oh
my
my
address.
God.
They're gonna come rob
All
me.
right, Ninja team, what's going on here? We're slacking. Well, what's cracking, everyone? What a segue that
Nice.
was.
Nice.
Welcome back to another episode of the Crypto Closeout. I'm Trader Mayne. I'm here with my boy, Ponzi Trader. Dude, finally a little bit of movement on the Bitcoin. It even seems like our friends from the show before us here are feeling a little bullish. Like, how are you feeling? Are you positioned? What are you thinking here?
I am slightly hesitant, but I'm bullish. I still think we have some proper velocity to get to the 82 region. But it's not the spot to chase. Chasing leads to chopping, in my opinion. I will, however, be chasing myself if I get the momentum out of it. If I'm watching the books and we get some proper breakout off of some bullshit headline, Trump yapping, and it takes that move to the 82 region, then I'm interested in, chasing it if I'm in the setup. But for now, I don't know, man. I think we kind of saw the move you and I were both expecting. We talked about this for 2 weeks. We're at the 80s. What are you thinking?
So I took a long a few days ago on, I believe it was Wednesday, it might have been Thursday, just kind of off this retest sort of here with a very tight stop and a very close target, just kind of aiming for that gap fill. We have that CME gap there, a lot of confluence between kind of 80 and 82K there, like you mentioned. So I'm currently in this long. I'm not expecting this to, maybe go back to the 90 region or anything like that, but anything's possible. Like when you zoom out on the weekly here, this is the most bullish the weekly chart has looked in a very long time. Now, anything can happen in crypto, but what I like about this setup, at least for now, even though I do think it's probably due for maybe some sort of, either consolidation or pullback, is generally we get pretty clear levels of invalidation. So I talk about kind of the all-time high setup on equities and stuff all the time. And really what it is just a level, right? And so when you have like a clear and obvious level that we are trading above, so, right now you could argue that level initially was 70, kind of 72K, then it moved up to 74K. We're retesting that, we're pushing. I think you can kind of just assume this is going to trade higher. Unless it fails back below this high. And then we have this really nice, clear, defined range right above us. So I agree with you. Like there's resistance here for sure. Could absolutely reject here. But if we get acceptance back into this old range, I think this entire old range becomes tradable again. So that's kind of how I'm treating it for now. I'm long. My stop invalidation is relatively close to my entry. I was able to get in pretty tight when we had that sweep the other day. So we kind of had this retest here. We put in a nice sweep at the low. So that's where my stop loss is at 74K. And I think that's pretty comfy. Let's see how we fare to open up the week.
The hourly looks great. If you switch back to my screen, like this, in my opinion, is one of my favorite setups for scalping. We're looking like we're just going to get pretty aggressive here. This like third attempt at 79.5, and we have this vertical accumulation, right? Like the lows are, and the interesting part is that Michael Saylor stepped out for the weekend and for the week. He tweeted, no bidding this week. He's stepping away from buying. So if Michael Saylor was in the books right now, this would be a lot more enticing for me to chase as a scalp. But nonetheless, it still looks like it's going to give us at least some sort of pop into the open tomorrow. Maybe it'll be headline driven and the market's already positioned, but I really like the setup. And I really also like Hype right now. Hype looks insane from a single line based analysis, which we like to talk about. We've talked about it plenty of times here.
Best chart in crypto generally.
Best chart in crypto.
Anytime it seems you want to chase any sort of vol, it seems like, why not just long Hype? Like you feel like, okay, I don't want a long Bitcoin. I want like something a little spicier. Hype usually just catches every single bid, and then on the dumps, it just holds up better.
And this has got two pretty solid areas for a take profit. You can get like a $2 move out to 43 to this high, and then you can take another profit at 45. And then if you want to swing for the fences, maybe, just maybe this is setting up for something really exciting. And it's been the spotlight for the narrative on crypto markets. It's really the only thing that's been trending since March. Pretty aggressively.
And we've got hit 4, right? Very soon, no?
Yeah, there you go. There's more of the narrative.
So for those who don't know, maybe you're one of the TradFi holdovers from the prior show here. So Hyperliquid, one of the bigger things that they've done recently with HIP3 was add things like oil and gold and some of the indices to Hyperliquid. So basically you're trading a perpetual for lack of a better term, product, but for the NASDAQ or for oil, and it doesn't close. And so now I think this has two major obvious, customers, right? There's TradFi people who say, hey, I want to be able to actually speculate on what's going on in oil over the weekend, even though the traditional market's closed. And then you have crypto people who are now expanding their horizons, and they're like, well, it's just another perp. I don't need to learn anything new. I'm already comfortable trading these. It's just a different asset. So that was HIP3. HIP4, if I'm not mistaken, Ponzi, is prediction market.
And there it is.
Are eBay's worth $56 billion?
I haven't seen the financials.
Their website looks the same as it did 20 years ago when I last opened eBay. That's crazy. Okay, very interesting.
Sorry to interrupt you.
Yeah, but so I agree. I think Hyperliquid looks really good. I think those of you that are TradFi players, if you're not aware of what companies like Hyperliquid are doing, NATO is doing, all the stuff that you're already trading, all the stuff that's discussed on the show that comes right before us, all of that's it's already or going to be tradable on chain in the coming weeks, months, and in some instances, things like gold, silver, the NASDAQ, oil, already tradable on these DEXs, which is pretty cool. So, I mean, I think this brings you up to something interesting I want to ask you, because this is something I was talking about on my stream. Do you think that the proliferation of Hyperliquid, lighter, NATO, these DEXs, which are now going to allow you to trade, and I mean, gosh, we have Polymarket's going to have single name stocks. They're launching perps. Robinhood's getting more Web3. Where's the bid for altcoins if all of this stuff is coming on chain, next bull market? Like, obviously, there's always going to be a degen aspect of crypto, people who want to trade meme coins, whatever. But I feel like for the traditional altcoin, this has to materially affect the bid. Who's interested when you can long AI coins, SanDisk, Micron, stuff that's absolutely ripping?
Yeah, I mean, I've taken this narrative pretty aggressively for the last 12 months, and it's that altcoins are just another instrument for people to speculate on. And that's because prior there were, maybe less instruments, but now with perpetuals, coming across the regulatory board and essentially making their way into the mainstream. I have a feeling people are more interested in trading stocks with leverage. And we've seen that for the last 12 months. ETH was $2,100 in 2021, and it's 2,300 right now, you know? So crypto has kind of been on the back burner. I'm sure it'll be a runner again, but the altcoins that exist today are not going to be the altcoins that are making generational wealth, in my opinion. There's always going to be something new and shiny. And whatever that's in the next cycle for crypto, who knows? But I don't think it's going to be, Floki, for example. Like, this is dead and gone. We had fun with this at some point way back here. But that, maybe it has a little squeeze for late shorts somewhere down the line, but no one wants to touch Floki anymore. And it's just a rotation game of whatever the next shiny thing is going to be to make money on. I think it'll just be stock perps.
Well, I think it's going to be an interesting convergence of meme coin, altcoin traders, crypto traders in general being like, well, wait a minute, I'm going to trade real companies with real revenue that maybe are a little bit more predictable, and at least of late have actually had volatility and, followed the trends of the broader market. And then there's going to be TradFi people saying, hey, you know what, I'm going to be coming on chain to do all of my speculating now because I can do it just with so much more. I mean, gosh, the amount of the amount of cool stuff and info you get from Hyperliquid. I show some of my TradFi friends like Hyperliquid and what info you can get, level 1, level 2 data, all of the stuff that they make clear and transparent. They're like, this is nuts. And I was like, yeah, and you're soon going to be able to trade everything like this.
That's the blockchain, bro. Like at the end of the day, we meme about like, oh, the blockchain, but like that Hyperliquid is really doing it publicly, transparently, because it's on chain. So you can't obfuscate data. Like if you're putting on a position on chain, it's you're either LARPing or you're telling the truth. And if you're telling the truth, everybody can see it. So
yeah, dude, I mean, I think this is one of the coolest things that's happened in crypto in my opinion, since DeFi. Like I thought the idea of DeFi, it wasn't perfect. Obviously there's still lots of issues with DeFi. I mean, there's risks with hacks and all this stuff that we've seen lately. But the idea, it's like, hey, screw the bank. You can do all the things that you traditionally would need a bank for, a middleman. Now you can do it on chain. Now you can do it with crypto. And now we have this kind of like hyper perpetualization of everything. It's just cool. And it's, I think Kobe was speaking to Thread Guy recently, and he's like, you still have to be like bullish and excited about crypto, like to be here every day. And like, this is the kind of stuff that keeps me engaged and keeps me stoked and, keeps me excited, as opposed to the pump fund trenches and all that other stuff that I'm, clearly too old for.
Yeah, you want to talk about this chart that I just brought up? Remember, I think we've talked about which is lighter, every single episode, and it's been a nice transition from week to week to watch it develop, as we spoke about, from aggression to slowing down to starting to revert. Look at that.
Yeah. Now the biggest issue I have with this chart, and it's not an issue with this chart in particular, is allocation of mental capital and actual capital. So like this chart shows all the way back to the start of the year. So we're in May, right? And this chart's just stopped selling off. It's starting to turn. I'm not saying this thing can't put in an absolute ripper, but let's go look at Micron or SanDisk or some of these companies and look at their charts from 2026 to now. And it's kind of like, what I try and tell people is like, you only have so much, because every time I do a stream, people are like, what do you think about Dogecoin or Bonk or any variety of the charts that look exactly the same as Lighter? Because they all look the same. Doge, Bonk, Lighter, XRP, CRV, they all look the same, right? They're bottoming out. Eventually, they're probably going to pump. Maybe they have one more low in them, but they're at least not selling off aggressively anymore. But it's like, how much of your time and energy and day, I'm not saying you in particular, but I know for a lot of the average people, they're looking through all these altcoin charts. It's like your mental capital can be spent. I'm not saying crypto's dead, don't pay attention to it. But like, I can look at that chart in 30 seconds, mark 2 levels and say, okay, once it breaks one of these 2 levels, I'm interested. And in the meantime, I'm going to go look at this plethora of other things. Like, I'm always trying to encourage people to expand their horizons outside of some of these coins, because some of these setups like Lighter, even though it likely will pay eventually, it might take months for that setup to play out. And it's like, are you just sitting on cash this entire time? Or are you just holding Lighter as it consolidates for the 3rd month in a row?
Yeah, man. I mean, look at this. I think we talked about this last time, but this is absurd. We're in a blow off. In my opinion, we're in a blow off phase for most of traditional finance, equities are really seeing some insane overnight moves across the board. And it can go higher. Just listen, just because we're in a blow off, I'm not saying this is the top, but the risk reward from entering here does not equate to, having entered here. And like I said, it could do this. But
we've had Paul Tudor Jones and Warren Buffett both come out very recently, basically saying like, yeah, like, I think Berkshire Hathaway is sitting on more cash than ever before.
Yeah.
And people are clowning, be like, Warren Buffett's taking profit and he's telling people like, oh my God, like, and Paul Tudor Jones saying, hey, I'm not saying it can't go higher, but I'm just saying I don't see long-term value in stocks necessarily right here. Everything's over levered. It's, and to your point, it can go higher, but as we get higher, the air gets a little thinner. You wonder if the risk reward remains here. And this is why I'm interested to talk to our guest today, because he is more of a TradFi person who's now started into crypto, not started, but has been into crypto over the last several years. And so he has this kind of TradFi backing and understanding and a depth of knowledge that I think neither you or I have when it comes to this stuff. He's also very, very old. I think he's like 70, at least in crypto years. So he could probably tell us about the great financial crashes of 2008 when, Ponzi here was, I think, 5 years old. So why don't we bring Horst on? Let's welcome him in here. How you doing, bro?
What's up, guys? Glad to be here. How's the
welcome,
sound?
Man. Sounds
you
great.
Sound great.
Sounds
Look great.
Thank you so much.
Don't look a day over 70 years old. So we're just here chatting shit as crypto bros do about being experts on everything completely outside of our domain and that we have no, actual expertise in. You're someone who comes from a TradFi, background. When you hear guys like Paul Tudor Jones, you had that great podcast recently. You hear, you see what's going on at Berkshire Hathaway and Warren Buffett's fund, and you're looking at this market, are you in the same boat where you're like, this is clearly are we right? Like, this is clearly a blow off. It's just like, how long until the music stops? Or you're like, hey, this thing's got legs. I have no chance it's slowing down anytime soon.
I don't know. I feel like every cycle, every few years, there's someone who is, extremely well known, extremely talented, and they just time it wrong. So that could be Jones right now. That could be Buffett. They've been on incredible runs. So, I mean, it would make sense almost statistically for them to eventually have a misstep. I don't think it really matters, obviously, but no, I actually think that I think the market's in a good gear right now, honestly, like stocks wise. You've had the index move down, so it doesn't seem like there's much bond issues right now. The VIX is back down, the equal weighted S&P is up. I think the AI narrative is still intact. Like, earnings were good. I think there's a lot of things going for stock momentum right now. I mean, it's important, obviously, you have to identify what things are driving the market. In the last couple of months, it's been just getting DDoSed constantly with headlines. So it's been Middle East tensions, right? But I think the stock market has looked through that. I think right now it's we've had a good earnings season. And honestly, as silly as it sounds, we have to think about what narratives might become important, right? And what that is on the radar might drive stock prices further. And it could be like this mythos thing, right? Like, is that the next narrative driver? So no, I think stocks are in a good place. Listen, man, there's a variety of reasons why stocks have a really tough time going down and why it's really tough to be a bear. You have automatic retirement flows that go into them. Like, every week, 2 weeks, people are just putting money in the stock market. Policy affects it. Psychology, right? There's like a Pavlovian response. Like, you just have to buy the dip. The index is self-cleaning. You have corporate buybacks, right? So, it makes it really difficult for the S&P to move down and stocks to move down. I think right now, I feel like people that have been trading crypto have been sort of like Stockholm syndrome to some extent. Like,
that's crazy. Yeah.
Dude, the moves that are taking place in equities, not only are they more durable, in equity, if you're a technical trader, I think you could convert easily. The benefit of not working for a desk or not working for a firm is you could jump to different markets. If you're an oil vol trader or you're an oil market maker, once the oil fund is done, you can't just follow semiconductors, right? So the people that have been just focused on crypto, I feel like they've just had their head in the sand, honestly, because other markets have just been crushing it. and it's been such a waste to I'm just iterating off of what you said, because you're talking about just bandwidth, and you're locking up capital, locking up mental capital, focusing on charts that are, that are for the most part flatlined from a activity standpoint. I think the equities fun is going to last for a bit, honestly.
Yeah, I'm with you. I mean, that's the issue, right? It's really, really difficult to call tops. And like I said, PTJ, Berkshire Hathaway, they're probably correct. They're just early. I'm going to say they're right, but they're early.
Yeah.
But with that kind of size, you have to be early. You imagine trying to put aside $300 billion, worth of, or looking for $300 billion worth of exit liquidity. You can't really make that decision late. You have to make that decision early. So it makes more sense for them to be stepping out of the market month by month, and they have been for 12 months. And now they have unreasonable amount of dry powder to reposition, and whether it's a year from now or 2 or 3, it doesn't matter for them. So anybody who's trying to trade specifically off of that filing is, not going to have the same time horizon. But there is absolutely something to note there, in my opinion.
Yeah.
So,
I think of the two, I definitely am more likely to focus on anything that Jones does.
Yeah.
Buffett's a fundamentals guy. They time and time again, they show that fundamentals don't really matter until you're like 7 years out. Between 1 year and 3 years, it's all flows and positioning.
So would love to get your opinion on this again as someone with a TradFi background. Do you have any friends, former colleagues who are now looking at crypto more because of things like Hyperliquid, where it's like, hey, wait a minute, like I'm already trading this stuff. Like, is that a real movement that's happening? Or is this something us crypto guys are like, oh my God, all the TradFi guys are going to come over now and trade NASDAQ on Hyperliquid? Or is this something that's real and it is happening?
I think it's a bit of both, honestly. I mean, I have in my old circle, I haven't heard it. Hyperliquid's an incredible product, but I think it's more like that it's overblown by the people that are in our market, because it's genuinely one of the, I don't know, first legitimate things that I feel like we can all get behind. But I don't know if it's as important as, we're kind of inflating it to be.
As Hyperliquid holders are inflating it.
Yeah.
I mean, they've got the best shill team, I think, in all of crypto. It's unbelievable.
Well, that's what happens when you hand them millions of dollars, right? That airdrop.
Dude, I know. Like the Pump Fund team was asking, it's like, well, why is our thing not working? It's like, I don't know, do an airdrop, create a wealth event, and then maybe people will be interested in your token and your community instead of just, mass extraction nonstop.
Yeah.
Cool, man. Well, I would love to see are you sharing your screen today? Is that something you guys set up and organized?
Yeah, I mean, I could talk a little bit about crypto coins.
Yeah, we'd love to see kind of your thoughts here on, Bitcoin coming in a pretty big technical level. I think here, kind of the underside of that last breakdown range. Before we get into the nitty gritty, just high level, are you bullish, neutral? Like, do you think that the low's in, anything like that?
So over the last few months, I've definitely made a point of getting some exposure to BTC. I feel like it's kind of hit where you would want to at least start scaling in some spot buys. I mean, if you're taking a multi-year time horizon view, I think this is definitely a place where it has made sense. I don't know. I bought some down in the 60s. I hedged a little bit off at 75.5, and then I chased again, and I'm exposed with that initial, or rather those purchases. But I think right now it's trading constructively. So it's definitely doing a decent job of building value higher, but it has no speed, and crypto used to have a lot more speed. And because of that, the distortions on the low time frame were just great trading opportunities.
Yeah.
So, I mean, the spot volumes are starting to come in, but interest is definitely gone. But, interest being gone, I think, is one of the things you would want to see. Sailor has an impact again, which is important. Stark has an impact on prices, which kind of is, I think, a double-edged sword, because one, he's like the Eggman, but two, I mean, he is having an impact on prices, right? So prices do drive narrative. And I think once you get that flywheel started, everyone just forgets, the sort of morose bottom period that we were within. But I don't know. Honestly, I just feel like the time that I focused on BTC, I feel like I was missing opportunities that were taking place in TradFi. So I think it's a good spot. I wouldn't be surprised if it moved lower, but so far, I mean, I think it would have there's twice in the last couple of weeks where I've shorted this market where I felt like we're good contextual risk reward spots. And I think at this point, like, you would need to see that we've put a good amount of positioning underwater. And right now we're just trading above prior week value areas. And, it's constructive, but it's slow. So
slow, I think, is the operative word here. That's how I felt about crypto of late. And, we kind of touched on this already with mental bandwidth, capital bandwidth. Where are you putting your money to work? Like, if you are going to be trading, I think there's a lot better markets and charts to be looking at outside of crypto. I could probably count on my hands how many trades I've taken this year in crypto. It's not a lot. And the alternative, if you're able to, is to actually take back some of your time. I think it's very easy to forget how crazy and time consuming crypto can be when it's moving, when it's volatile, where you feel like you can't step away. Sometimes you have to appreciate the times where it's like, hey, you're not really missing out right now. Those trips you've been putting off, whatever you've been putting off doing, now's not a horrible time to get into that until things pick back up again.
absolutely.
So going into this week, anything you're looking at, crypto, stocks, otherwise?
Show me some low time frame stuff. I want to hear about what you think overnight into
stop
Monday,
entry target.
Yeah.
I mean, the first thing I would think of is that we opened with a gap over the weekend. So being that we're still trading within, I don't know if my screen's shared right now.
It is.
It is? Okay. So the most important thing to me right now is the fact that the market has been just building value higher. So, I mean, it's slow. I'd say there are periods where it's constructive, right? So this market hasn't really gotten slippery or gone away, which is, shitty for a low time frame trader or anyone who's just interested in trading some level of volatility. But at the same time, like, it's healthily building platforms and bases to work off of. So I don't know, going into this week, I think that if you're bullish, you have the signs that you would want to see that there are tailwinds. And right now that we're trading back above, we're trading, but if you look at like 7-day or 30-day or even yearly VWAPs, or even moving averages at this point, because they're all supportive as some measure of cost basis, like, buyers are in a good position right now. So we'd have to lose like the weekly VWAP. We'd have to lose the last 2 weeks value to start putting anyone underwater. So you're looking at the 2-week value right here. Going into tomorrow, though, I think, you have a gap in the overnight session. IBIT has changed the nature of this market. So a lot of the times what I've looked for early on is for some profit taking and closing out of weekend gaps. Market reclaims the opening range and IBIT holds VWAP. And I think as long as you have momentum in sort of that sweet spot of like 9:30 to 11 a.m. During the NYSE session, that it's probably worth leaning into longs here. I feel like there's only so many times where it could test this level and not continue to push up towards, like, I don't know, like 82.5, 83. That's like the one standard deviation band of yearly VWAP. And we've kind of carved that out in, again, a boring manner, but I mean, it is what it is. So I think that the game is to just, I think, have exposure to that at this point. I don't see like that. In the past, there were plenty of, I would say, I said distortions before. So there was a lot of like very leverage driven opportunities in BTC on the low time frame. And I just feel like right now it's market structure has changed, price action has changed. I think we'll have that zip again. We're starting to trade back above the 20 period. So I don't know what I have up right now. So so market isn't even positioned for higher, I don't think. So one of the things that I was looking at before was 25 delta skew. So I think the options market's probably a pretty good filter for more sophisticated people in this market. IBIT is like half of the market share at this point. So Deribit, IBIT, and the market still looked like it's positioned in sort of a defensive manner. So I think that's good. So if you continue to break up and people are positioned defensively, I think there's the opportunity for a chase here. High time frame wise, trading above VWAPs, trading above, like if you look out on the daily, or the weekly, and these levels don't matter that often, but when you're around them, they do. The 20 period weekly, that for me has always been like you have to be involved to some extent if we're back above this, just for systematics. So I think things look good, fingers crossed, but I've said this a couple times over the last few weeks, and it's been like the fever pitch moment where we're all kind of saying this looks great now, and it's the market kind of. This market has a tendency to like it'll trade within like a range of open interest. So it'll ping pong between like max positioning that it can handle from an open interest standpoint. You can see like open interest develops sort of a range, but over time has gone up. So you'll reach like a local maximum where the market just gets saturated, and then we go back down to the next exhaustion point. So it's up right now going into, you know, the open of the week. So I think you get some kind of sweep early, punish that positioning, and then hopefully we're able to hold these levels going into, you know, the next couple of weeks.
I like it. I align myself with that thinking, but I need it to actually go to 82 tonight.
Did you
Like
buy
right now,
like some zero DT?
Yeah.
No, I just I top blasted some perps right here, right now, thinking that we would
How
get
low
any
can
sort
it
of-
not go before it becomes a problem? Like, how can it go down to 78 before it goes to 82? It's got to go straight line from here.
No. Actually, it has to go. It can't go to 78.5. It has to go straight to 82.
What'd you buy? Some binary option?
I'm totally playing, but I am long both ETH and BTC here, thinking that I can get cheeky with it back to like 79, 80.
Nice.
So I actually want to shout out some of Horse's content here real quick, because you have, in my opinion, one of the best free courses on YouTube for this. So a lot of people, you know, who follow you, they know how you trade. But a lot of, I find like my content speaks a lot to like very beginner traders. I'm teaching like very basic structure, this kind of stuff. And then as people kind of progress in their journey, I find they're always looking for, you know, new things that they can add, new confluences, new ways to view the market. And you have an entire course on, you know, kind of, what would you call it? Like order flow? Like, is that how you would kind of categorize, you know, the way that you trade?
I'd say order flow. Order flow. Yeah, just order flow. You know, listen, it's at the end of the day, like this course is not that special. I mean, I was getting a lot of questions about it. And I put it out there on YouTube for free. It's just market profile and flow. So it's like profile just organizes the day so you could really quickly pick up on it, where the market is spending the most time, where it's accepted, where it's skinny, right? Where there's gaps. So when you're looking for the market to develop, where you're trying to find out where market's developing value, right? And what the norms are. So you can find out where it starts to look distorted. And then order flow is just at the end of the day, like if you think of price action, it's kind of downstream of what happens at the order book level, right? So whether you're trading stocks and it's time and sales level 2, you know, CLOB, whether you're focusing on the DOM, like that is the raw reason why price moves. Everything else is after that. So I think if you have a good take on just, you could determine supply and demand dynamics, I think strongly by looking at price action. But for me, I like to get a little bit more granular because I think it has made the difference for a lot of my trading to see like, okay, this is a breakout where there's actual participation. This is where those participants are getting involved, where they're in trouble then, because, you know, if you have a lot of positioning isolated in a very tight area, you know, it makes sense to think how you would act if the market traded against your positioning. So yeah, it's on YouTube. I mean, it's definitely made the rounds, and I'm happy that people have taken advantage of it. So
you may not want to take the compliment, but I'll give it to you again here, because as someone who doesn't come from this background on trading, I've watched it and I thought it was very valuable for me as a price action trader, because to your point, if I'm looking at an SFP, well, really what the hell is an SFP? There's everyone's like, how do you know if it's an SFP or if it's a legit breakout? How do I know if it's a fake out? This is how you know, to your point. You can actually go down to the granular level. It's like, oh, this is a demand zone or an order block, whatever the hell you want to call it. You can actually see, are there orders here? Like, are people doing what you think the price chart is telling you? So if you've ever had those questions and you want to know, like, how do I know if this breakout is a legit breakout? This is how you do it, and you're very good at explaining it. And it's free on the Flow Horse YouTube. And I think order flow has a bit of a ring to it. So I think maybe you can take that if you want, take it or leave it. So this is good. You're bullish. Everyone who's listening, we're going up, no down. Ponzi's long. I'm long. What could possibly go wrong? Even Don Alt is bullish. I mean, the stars are aligning for this to whimper higher and then fully retrace back to 70K.
Yep.
But just remember, man, it's not, it's like there's a unanimous agreement right now, but most of this market has gone through an extinction event like twice in the last 6 months. So there's nobody at this party anymore.
We're just the ones left.
Yeah.
Horace, tell me this, as someone, you know, there's probably some viewers here who haven't seen this profile that you're showing here. You want to teach these guys how to read it a little bit, these value areas?
Sure. You know. So this is the weekly. So the more common view would be going onto the daily, right? So we'll expand this, change the tick setting for a sec, a little bit more granular. So what you're looking at is each of these columns is one 30-minute high-low range, right? So one column, two columns, that's an hour into the day. That's your initial balance. And then you have, the duration of the session. I find this really valuable because I want to know where price is spending the most amount of time, where buyers and sellers are most comfortably transacting, right? And then therefore where the market has to go to get those people involved, okay? If the market is building value over a really tight range of prices, it's easy to say that, bull or bears are in trouble if we deviate X amount from those prices, especially if you're pairing this with some kind of feedback on positioning. But for me, it's just the easy way to put it is like, where is the market accepted? Where isn't? And anyone who's traded profiles probably heard this said before. It's like a very common saying. So I know where gaps are, where the market is zipped through, and it might zip through for a variety of reasons. It's an area of low liquidity. It might be where stops were ran. It might be where liquidations were. Generally, where stops are run, there's liquidations. So for example, like if I'm looking at this chart right now, and I want to know where the market is likely to offer a response, my first area would probably be, well, one, I would look at the extremes and I'd say, okay, we actually have a pretty disgusting low right here. So the fact that we've had multiple tests of this low and they've left us with that ledge, that's an anomaly. So as opposed to the high, the market has some level of kickback. So if it's skinny, that shows you the market barely was able to spend time there. If it's building in that region, it's showing you that it's accepted. But if I'm looking at this right now, the first area that I'm honestly looking at is this gap of single prints. So that's an area where there was no overlap, right? It's, it could be a low volume node in a volume profile. It could be a gap of single prints in a TPO profile, which is using time. And I look at that and I say, the market ripped through there, right? It rips through an area for generally one of two reasons. People were liquidated, people were stopped out. Where people place stops, we know that people also don't play stops. There's hard stops and there's soft stops. People have soft invalidations. So when the market comes back to that level, that's an area I want to be keen about, because I know there's probably some people that are underwater there that would more than likely like to get out. And it's more than likely going to be one of the more reliable spots to see price interact with from like a shorts covering standpoint. So for an intraday trader, I mean, looking at the profiles can be really valuable because you just see right away, all right, market's hugging here, market's accepted here, market is barely able to spend any time here. Why is that happening? Why is that the case? And a healthy move tends to build out over a range of prices versus moves that are very overextended, haven't built bases. Think about the way any structure is built in nature, right? Your tree is wide at the bottom, narrow at the top. It's not narrow at the bottom, wide at the top. So it's very basic stuff, honestly. It's people look at it and they think like, oh, it's like a very technical looking Lego kind of, I don't know. It's just a data organization tool. All it does is take every 30-minute bar in the day, pack it together. So you immediately see, all right, this is where the market spent the most amount of time during that day. It's one standard deviation. So it falls within, roughly 70%, right? 68.5%, whatever it is around the mean. So.
Nice. That's a really, really easy way to understand and put it.
Succinct for sure. Yeah, I think maybe an early week sweep of that area might be your entry if you're looking to get long, going into this week. I could totally see a little bit of a pullback sub 78K here.
Yeah.
Before we get involved. So I don't know are you using 1000X there, Ponzi? Are you going to be
no, I'm using 5000X.
Okay, so one single tick down and it's over.
I've already been liquidated.
Okay, well, how long till the power goes out?
We got a week. We got a week to fight back.
Okay, good to know. Good to know. Okay, man. Well, no, I mean, this has been super informative. So I think relatively on the same page here about crypto. Slow. Very, very slow. Other things to look at in terms of, long-term positioning. So this is something that I struggle with outside of the standard. So I mean, Bitcoin, I take a multi-year view. My retirement account, I take a multi-year view. I put money in the same amount every month. I have a tax advantage retirement account, similar like a 401k here. For someone who's like maybe younger, they're making a bunch of money in crypto. Like outside of like standard 401k stuff, like what are you doing to deploy capital long term in these markets? Are you picking single name stocks? Are you managing your entire portfolio? Are you working with a fund manager? I have a lot of young people who say, I made a couple $1,000,000 in crypto. I don't know what to do now. What kind of advice would you give, non-financial, of course, those kind of people saying, hey, you hit the lottery in crypto, what now? How to set yourself up for a longer period of time?
I try to stay in my lane. So I think when I was younger, I tried to be a lot more nimble. And I tried to approach the stock market. If I was very actively trading and taking that money and putting into my investment accounts, I was trying to time that portfolio as well. I feel like too much. And similar to like a CTA. So it was very trend followy, very much like driven by whatever levels of volatility we were experiencing and just some basic moving average crossovers. At this point, I also am giving an answer from someone who has 2 kids now, which completely changes the game. So my risk tolerance is completely changed. I feel like I tell everyone, know your lane. For me, it's within a 2-minute to 2-week time horizon. I put money in the S&P, I buy some single names, and I try to take like a Peter Lynch approach to the market where I try to be as pragmatic as possible. I say, I'm going to invest in the things that I own. I'm the asshole that buys a new iPhone every time a new iPhone comes out. So if you own an iPhone and you do that, you should absolutely own the stock. If you buy a fresh pair of Nikes every month, you should own the stock. So this obviously Kenmore appliances, whatever it is, right? So I try to exercise a little bit of that discretion, but at the end of the day, like I feel a lot more comfortable buying the stock market, the index at the index level, knowing that I might be really good within my, in my lane, timing the market, but timing the market also for me on the low time frames is because I don't want to have exposure to variance. And the more time you're in a position, the more exposure you are. And there's plenty of reasons to not be in positions for a long period of time with the way things have been over the last couple of months. But I look at things and I say, I'm not going to be able to time it and beat the S&P. Most fund managers have an issue doing that. If I put money in the S&P right now, I feel like there's a good chance that in 5 years, I'm either going to get my money back or have multiple exits at break even, or it'll be enormously higher or, significantly higher. And I think that is a trade-off I'm willing to make where I'm just willing to say, I want to own QQQ. I want to own a little bit of, Oracle. I buy some, semis, have a little bit more exposure to semis. I think you always want to have exposure to tech. But I try not to be too nimble, honestly. It was a mistake that I did a while back, and I just don't have the bandwidth for that. I have 2 little kids running around. My house is like Vietnam.
Which you were alive for, right? You were alive during Vietnam.
Yeah. Yeah. So I just chuck it in my retirement accounts, my SEP IRA. I throw some every single month like yourself, and I try not to, get too smart.
I feel like as I've gotten older and more experienced in markets, it's become boring is the word I like to use. It's boring, but it works. And there's a reason why. And I think most people just aren't willing to have that time element of, I really like what you say about buying what you use, right? Like, it's like, oh, I use Apple, I should own Apple. Cause my dad told me the same thing. Problem was he used BlackBerry a lot. So it didn't go very well for him. And they used another company, a Canadian company called Bombardier, which didn't do very well for him either. But I think the logic is sound. Like if you're using the thing, like, you should buy the thing. And I completely agree. I think as you age, obviously risk tolerance changes. And I think that's something that crypto people, the easiest way to demonstrate it is kind of the return to Bitcoin maximalism over time. Like when you get into crypto, first you try everything, trying all the new shiny toys, you're buying all the meme coins. And then a lot of my friends just end up being like, I really only like Bitcoin. And I should have just held Bitcoin this entire time. And to your point, I probably would have at least had my money back or close to, or if not, enormously more. So we're coming up on time here. So we ask most of our guests this. I'll ask you, and I'll add one extra question. So, bottom call. I know you said we've reached some areas of value. You already sprinkled some Bitcoin buys. If you had to give a number for your bottom price on Bitcoin and then potentially the next all-time high, we will hold you to this with the threat of violence, of course. What are those numbers? And then do you have a doomer scenario for what's going on, in America with the stock market, this AI bubble right now? Like, do you see any world where, hey, this actually is going to pop and we're going to have a 2008 style crash?
So as far as bottom calls and top calls for BTC, I mean, I feel like there's a significant chance that the bottom's in. I'd say it's over 50%. I think bottoming through time versus bottoming through price now is probably more necessary. You have to get people to the point where they actually don't believe anymore. And I don't know if you guys remember, there's a similar proxy in 2022 or 2023, whenever the Ukraine war was, February, where the market went into a period of uncertainty. The start of Russia-Ukraine war, it moved up a lot, similar like we did now. That uncertainty was removed, buy the cannon, sell the trumpets. Everyone felt like that was it, like we were at the bottom of the pits, and then the market continued to move down. So I always leave room for that, but I think there's a good chance the bottom's in. I think that the top, honestly, just look at how gold traded for a long period of time. Like, there's a chance that the top is within the last top. I mean, there's a chance, right? There's a chance that the top is through the last top, and then we spend another 8 months under that. So I don't think the reflexive bid is there in BTC anymore. I think it's more of hopefully we get all those passive indexers that are just like, hey, we want 25 basis points in this portfolio now. From now on, it's never going to come out. We're just going to rebalance. And I think that adds a structural drift over time. But as far as like doomsday scenarios, I think the stock market, it's just, again, it's very tough to bring it down. It recycles crap out of it constantly. And I think the doom narratives are always really romantic, but I don't see anything in the very near future that could be, whistling past the graveyard. I feel like at this point there is existential risk from AI, and I almost feel like we've kind of crossed a Rubicon in society with the way things are lately, where the risks for the stock market are the risks for everything else, period. So it's not just a portfolio thing. But I don't know what I don't know. I at this point, like, I've focused so much attention on this crap lately. Not a couple months ago, I was focusing on it, and I was like, I don't know enough about this. Why am I trying to do this? Like, I love spending time with my kids. I love going to jujitsu. I love trading. I only have room for those things. Anything else right now is like, leave it to the experts. Like, I'll try to be as prepared as possible, but even then, like, again, like, knowing my lane at this point is really important.
It's a really good way to put it. Is that what happens when I turn 80?
Listen, man,
Sorry,
just keep your fitness levels up and you'll feel like you're 20 for the rest of your life.
I had to do it. Mayne's been doing it all night. That was my turn. That was my turn.
I have a horse that's older than you, so it's all good, man.
That's crazy.
So funny.
How long do horses live?
Well, I don't know. So my oldest is 28.
Oh, I'm 28. That's crazy.
His horse doesn't fly planes and stuff, though, bro. So he's probably living a less risky life. He's getting pampered and whatnot. Dude, thank you so much for the time. I some to leave with crypto Twitter people, right? Leave stuff to the experts. Focus on what you love and you enjoy. Some things are, you don't know what you don't know. These are things no one on crypto Twitter, I think, has ever said in the same sentence, but I think it's sage advice. So, hey, man, thanks for making the time. We really appreciate it. Enjoy the rest of your Sunday.
Thank you so much, you guys. Take care.
Take it easy, brother. That was really, really, really authentic and good advice that nobody on crypto Twitter would actually adhere to.
Well, you got it. That advice comes with times during this section, he's lived multiple lives. You could say many lives. The fact that he's got a horse older than you is so freaking funny. It's unbelievable. But no, dude, I mean, I agree with a lot of what he says. I want to kind of jam on something he said at the end about, like, I don't like this. We've crossed the Rubicon in terms of AI risk being more than just because that's how I'm like, man, AI bubble's going to pop and my, retirement portfolio's cooked. It's like, if the AI thing is as bad as we think it's going to be, the last thing I'm probably going to be worried about is my retirement portfolio. It's kind of like the war trade. Whenever there was like war escalation, if people remember back in 2022, I want to say it was Ukraine, Russia was kind of the centerpiece then. And it was like, anytime that escalated, we'd get a nuke. And then everyone's like, oh, Russia's saying they're going to, nuke Ukraine. It's like, well, you buy it, because if nukes launch, it's over, And if they don't, which is what is probably the most likely scenario, we probably bounce. And it's almost kind of the same thing now with this AI thing. It's like, if AI is truly going to take over and Claude Mythos is going to come out and leak your and I's Instagram meme DMs, we're ruined anyways. So who cares? Because and then if it isn't the end of the world and the world's going to keep worlding, he's right. The stock market has some durability to it, and it has like a cleaning, self-regulating mechanisms within it where companies are cycled in and out. And these are real companies. And I think that's something maybe it's just like someone who cut their teeth in crypto. It's hard to conceptualize that, like, well, no, but like these are the 500 best companies in America. They're not just 500 random coins. You know what I mean? Or it's not just Bitcoin and whatever else we're looking at the time. It's like, you can, it's like a sports team. Like you can get relegated out of the top league. You can get relegated out of the index. So I think that's very good advice and very interesting. And, I'll shout out Flow Horse's content again. If you're interested in market profile, order flow. His YouTube is an awesome resource. He's got a great free course on it.
Yeah, I should actually watch that. I've never seen it. I think I'd have some entertainment out of it.
So I've always had this thing where I would tell people, like, don't overcomplicate, your system, do what works. And if what you're working works, don't break it. But the thing with order flow market profile, because I've watched his course and I don't use it super actively, but I'll use it in certain instances. I would never tweet about it, of course, because it'd ruin the allure that everything I do is based on a big gray box. But if I'm ever like wondering, like, hey, is this a sweep? Because my entire strategy is based on like, stop runs, basically. Using order flow and market profile, you can actually see in the data like whether or not this was a sweep or like just because it's crypto and sometimes it's low vol and sometimes there's not a lot of people trading, like it just ticked above a level and it wasn't actually meaningful versus, actually there was money exchanging hands here in a meaningful way. And this is something you could pay attention to, or this is a legit breakout. You can see actual participation. And sometimes those things can't be answered with the chart alone. You need that extra layer of confluence and data, and that's what you can get from order flow.
Yeah, no, that's a fair way to put it.
So I actually really like the level that he pointed out for single prints here. So if we zoom in on Bitcoin, I'm looking at the 4-hour chart now. We kind of have this
scary
level here that I think, and you can see we got little 3 drives here. This is your kind of push up over the weekend. We started with a little bit of a gap up in equities. I could totally see us. I think you had this kind of wedge-like drawing, the dip below the wedge, and then the actual move.
That'd make a lot of sense. Time to 5,000x short BTC here now.
Yes, exactly. All in.
Stop
Make sure you do it on
target.
NATO, so you're collecting that sweet points for that ink airdrop. And I never forget the plug ever. I'm one of the best. One of the best
reads
in
me
the
like
game.
a book.
One of the best in the game. I never get the plug. I actually really like this kind of pattern. So it's like you have a sweep and then you have a break in the other direction above kind of what would have been resistance. I call it a break, or you call it whatever you want. It's an SR flip with 1,000 different names. I really like this kind of setup where then it breaks above. Now, if we retest this, in theory, this should hold, and you can put your stop down there, and you just, assume this goes straight infinity from here.
That's the math, right? I think we actually talked about that math at a Coachella together on a video that I took. From here, it goes to infinity.
Yeah. Untold riches, like untold riches. No, dude, it's I think this is kind of what you want to see if you're a bull. Any sort of shakeout, pullback, low. This has been a sturdy move up. It hasn't been fast and impulsive. It's been up, consolidate, flow. Like it's built value to use kind of his vernacular there. Next thing I just kind of want to see is some reclaims. Like I would love to see us actually get above this, kind of old range low. And then I think you look literally 80 to 85 is the next range you're looking for this to trade into if we can get and hold above where we are right now. So maybe it's time. Like you said, we're the last 3 guys at the party, wondering if we're going to continue or we're going to just like end it. The sun's come up, the birds are chirping, but maybe it's
all the plug.
Yeah, exactly. maybe the time, maybe the party's going to keep going, but I do believe that we're at one of those interesting points with crypto where it's starting to look interesting again. People are going to start paying attention. Participation is going to probably show up. It's like, okay, are we going to get follow through? Because we had a very similar moment in time not that long ago, before the floor fell out. So I'm going to remain cautiously optimistic going
You
into
want to see
this
a
week.
crazy chart right now?
I would love to.
Pull up Zcash. Look at the daily. Own world, dude. This looks like BTC in 2019 or 2021.
Yeah, it looks pretty good. Like,
It's the best chart I've seen in so long. What is that all about? What's going on in Zcash world, bro?
I don't know, man. Is it? I think maybe has Naval tweeted? Has Mert tweeted? Have
I don't know.
the
chart just
Zcash
looks
army?
good though. Oh my! Guess who's watching the show?
Who?
Ansem just texted me saying it's quantum resistant private Bitcoin, brother.
Oh my goodness, bro! No text
Z,
from
are
Mayne
you
is
bullish? Are you that bullish, Zcash? Do you have some? Do you know something I don't know?
I don't know, man, but we'll have to find out on Thursday on episode 2 of the Market Bubble. Shout out to Z with his new show with FaZe Banks. Congrats to the guy. A lot of hate on the timeline for like no apparent reason. It's like, oh my God, are people not allowed to do things? Crypto Twitter is one of the most miserable places on the entire planet. It's unbelievable.
Yeah.
It's like, hey, I'm doing this cool thing. I'm really excited about it. I want to share it with you. And it's completely free. Coming from someone who's, done very well and had some success over the last cycle, and everyone's just shitting on him. It's like, I do not envy the position Z was put in over the last 24 months. It felt like an episode. It must have felt like an episode of like the Black Mirror or something, just where it's like, wait, what's going on? He's been foisted into this main character space, and every move is just everyone is super critical. I watched the entire show. I thought it was great. And I thought, it was interesting takes. I also like the dynamic between Banks and Z. They offer different perspective, different things. I'm excited to see where they go with that. And I'm waiting for my invite to be a guest naturally. So quantum resistance, what do you call it? Quantum resistant.
He said quantum resistance private Bitcoin, brother. All the Bitcoin OGs who hate Saylor and Trump are going to buy Zeke. Shout out Mayne. Tell him I love him.
I love you too, bro, and I can't wait to explain to my accountant. I can't wait to explain to my accountant that this was my thesis behind the trade that lost me $1 million on next year's tax return. It's like, what was the thesis behind this? Quantum resistance Bitcoin, bro. Okay, and it looked good at the time, and now I can carry forward this capital loss till I eventually, hopefully, make money one day again in the future.
Dude, this chart looks good.
It does look pretty good, man.
Am I gonna top blast this thing and just hold spot and pretend? Oh, it looks so good, man. Tell me not to buy it. Does XMR look that good? Not as good, but
no. So you probably know better than me. Like I'm like a neophyte with this shit. What's better? Like, what does its job better? Is it Zcash or is it XMR? Because I've heard both. Like, I've heard from some people like XMR is not actually private.
I think that's the wrong way to approach both of these assets. I think what you really have to ask is who is supporting each or the other in terms of like financially and socially. Like you have the cabal supporting Zcash, Mert, and those guys, and like who's really on the XMR side? Like which has more attention in the market right now, and which one has more of a bid, right? It's like I don't think anybody's besides criminals is actually using Zcash or XMR at the moment to transact. Sure, like everybody deserves their own privacy, but are you opting in to use Zcash when you're sending me money for when we split?
No, I send a pigeon with cash taped to it, and I say fly birdie fly, and then I imagine it dies somewhere over middle America and never makes it to you. But I will get you that money eventually. I got you. I promise. No, I mean, like, it's so funny because like I don't think I've used either of these ever.
I haven't either.
And I've shout out Cooper, thank you. I've kind of given up on this idea of privacy in terms of, like my finance. Like I pay all my
Orwell would
tax.
be pissed to hear that, buddy.
I know, dude. I know, but I only pretended to read. I used Cole's notes or whatever for that book report back in the day.
Nice.
I don't know. I pay all my taxes on all my crypto. The government knows all my wallets and whatnot. Like I agree. I understand the use case completely. I just find it hard to believe that with the direction the world is heading in terms of tech, that privacy will be allowed. You know what I mean?
Yeah,
like
I'm with you.
In Canada right now, they're passing legislation where the government can force like the phone carriers and social media companies to just give up your personal information, your messages, etc., if they suspect you might be guilty of a crime. So they don't even need actual it's not like a cop pulling you over like suspicion or whatever the legal term is. They don't even need that. It's like, I just think you show me all of your DMs, and then the government's gonna get access to all of those DMs I send you in the middle of the night that are very inappropriate and aren't meant for anyone's eyes but yours. So I just find it hard to believe that we're gonna get the ability to use private, even like non KYC venues. This is my biggest bear case for Hyperliquid, and maybe it's not accurate at all, but like if the Democrats get back in America and they want to be like, hey, we're going to reverse as much as we can of what Trump did, do you not think going after something like Hyperliquid and non KYC trading venues is like low hanging fruit?
Yeah, easily. Well, we're up on the time here, Mayne.
Anything
you want to give the people for the week to start their beautiful week?
Yeah, guys, I think cautiously optimistic. Like I said, looking at the weekly close on Bitcoin, I think any dip earlier in the week, I want to see this get bought up, and hopefully we're in the 80Ks and looking back at this episode laughing.
Yeah, baby, I love it. All right,
Awesome.
guys.
Thanks for tuning in to another episode of the Crypto Closeout, brought to you by Kraken and NinjaTrader Live. I'm Trader Mayne. This is Ponzi. We'll talk to you all next week.
Good night.